What's up, family? Andre here. Over the last several weeks, there has been some important financial information that really did not generate a lot of buzz that is absolutely crucial to your overall financial portfolio. On January 12th, 2022, Joe Biden released the December inflation numbers. This compared inflation in 2021 of December compared to December of 2020. The information really generated a couple hours of buzz, but in my opinion, inflation is the single biggest killer of wealth that there is in the United States of America. On today's video, we're going to explain why that is and the strategies that you need to have around combating inflation and why it's important to you and your money. But before we get started, the all-important instructions of what I need you to do along with this video, I need you to smash that like button and hit the subscriber button to be able to get alerts and information on content that is released on this channel. On January 12th, the December inflation numbers were released, and year over year, inflation rose 7%. That didn't generate a lot of buzz and was, in my opinion, underemphasized. Inflation is the single biggest killer of wealth in this country. Why? Because it is silent. It is silent because no one really talks about it, and it happens on a regular basis. The December numbers compared year over year, but inflation actually hits your pocketbook on a regular basis on things that you do on a monthly or even bi-weekly basis, such as purchasing gas and groceries. The cost of those goods and services increases pretty regularly, and you go and spend those and take care of those things on a regular basis. So when inflation rises, it costs you more to go do those things that you do on a monthly, daily, or weekly basis. Why is inflation such a silent killer of wealth? Because we talk about what inflation did in 2020 versus 2021, but let's extrapolate that over the last 40 years and take what the average inflation rate has been. The average inflation rate is between 5 and 7% over the last 40 years. That is, every single year, the cost and the standard of living increases. So it costs you more every year to do the same thing that you did last year. If you don't change anything about your lifestyle, it's going to cost you more to do the same thing that you've always been doing. So if the cost of living is going up, in theory, your wages and your income should be able to rise in the same fashion. If you put your dollars in real estate and it returns a 7 or 10% rate of return, now comparative to inflation, which year over year was 7%, but when you look at over the last 20 to 30 years, on average, inflation has rose between 4.5% and 5%. Now you have the ability for real estate to generate a rate of return that is 2 to 3 basis points higher than the average of inflation. More purchasing power and more dollars that can be deployed. That's why inflation is one of the single biggest factors of killing wealth, because it's silent. Typically, you don't sit down at the beginning of the year, and many of the planning professionals don't help you sit down at the beginning of the year and say, here's what the cost of inflation has been over the last year. Here are some of the tools and resources that we need to deploy in order to be able to combat the rate of inflation, just if it's going to be comparative to what it was last year. Now you have a strategy of why you need to go and invest. We talk to people all the time about investing, but we don't explain the rationale of why you need to invest. You can't build wealth by putting money in the bank. It will never be able to catch up with the cost of living. And even though you're saving, you will never be able to have the purchasing power that will help you to be able to build the type of wealth that you and your family needs. You need to have an investment strategy that allows for you to mitigate risk while at the same time providing you with the rate of return that can help you be able to combat inflation. Some tools that you want to take a look at that can help you be able to develop a strategy is to monitor the inflation reports. In July of 2020, I did a video of a detailed explanation of what inflation is. I'm not going to talk about that, but if you really want to understand how inflation works and where it applies pressure, go take a look at that video and it'll give you a detailed explanation of how inflation as applicable to your situation. Inflation is the silent killer because it affects the things that we do to maintain our standard of living on a regular basis. We purchase gas and groceries frequently to provide for our families, and so the cost of those goods and services going up has a direct effect on our pocketbooks. When you look at inflation, not just year over year, but over the last 40 years, inflation has risen on average just under 6%, actually about 5.9%. In theory, you would think that wages should be able to keep pace with the rate of inflation, but wages have only increased about 4%. So that tells you that wages and income is lagging in inflation. Why is it the single biggest killer of wealth? Is because those wages and income that are lagging behind inflation means there's less disposable income for families and individuals to have. Why is disposable income important? Because that is the money that typically people will use for luxury items, or in this case, in order to be able to build wealth, investment tools. When we have lower disposable income available, we need to take that and be able to have that to provide for our families and maintain our standard of living. Therefore, it kills the ability to build wealth. You don't have the ability for disposable income to be available to put it into other investment tools. Why is investing a strategy to combat inflation? Because if you put your disposable income into a traditional financial institution, such as a bank, in a savings account, the rate of return on that account is about 2%. Well, if inflation is 5.9% and your money is growing at 2%, you're losing purchasing power by just having that money in the bank. Now, there is reasons for you to put money into the bank because you need it for emergency purposes. So you need it for liquidity and accessibility. And there lies the rationale on why many people invest. It is to be able to keep pace or be ahead of the rate of inflation, which increases your purchasing power and allows you to be able to go and purchase other luxury goods or other assets. If you put money into, say, an S&P 500 fund, and that fund is growing 7 to 10% year over year, now you go from lagging inflation to being ahead of inflation by 2 to 3 basis points. That means your dollars are growing, and now you have accessibility to be able to use those dollars to go and do other things. Now you go from lagging inflation by 2 to 3 basis points to being ahead of inflation by 2 to 3 basis points, which provides more purchasing power for you to be able to deploy that into other luxury items because you have more disposable income, or to deploy that into buying other assets such as real estate, which can provide either higher rates of return. That's why it's the single biggest killer of wealth, because inflation affects after-tax dollars. It is the money after you've been taxed that now is being applied to the increased cost of living. So it actually is another silent hidden killer of tax that is applied to those dollars. It's important for you and your family, as you plan your financial strategy for the year, to look back and see what inflation did for the previous year. And look how it's extrapolated over the last 2 to 5 years. Now you can put together a strategy of how you want to be able to invest and to combat inflation, and understand what that looks like. There may be some things that you may need to adjust in order to be able to minimize the effects of inflation, such as it's not that you won't go and purchase gas, but maybe you now have to go and purchase gas at another facility that has a lower cost, so that that cost isn't passed on to you in the form of inflation that reduces your after-tax dollars and thus leaves you with less disposable income. It may be important to take advantage of certain grocery stores that have a lower cost of inflation in certain areas that are important for you and your family. Take advantage of coupons and sales that could be beneficial to lowering your grocery bill, because even if inflation is applied to those particular goods and services, you can be able to combat that. Thus, having more disposable income then allows you to put it into those vehicles that can over time generate the higher rates of return than putting in your traditional institutions. In addition, let's look at the median household income for 2021 which was a decline of about $2,000 in comparative to the year before. Median income was around $67,000 for 2021, where in 2020 it was around $69,000. So if inflation is still rising at 5.5%, or in this case 7%, but the median income is declining, the purchasing power of those dollars, especially in the middle to lower income brackets, has a much more detrimental effect on the availability of disposable income to be put into tools that can generate wealth. Again, if you want a more detailed explanation of inflation, how it works, how it is applied to certain areas that are important to you and your family, please go check out my video from July of 2020 for a detailed explanation of inflation. I hope this explanation helps you, that you are able to understand these are some of the important areas that you need to pay attention to, because it's not going to be something that someone else is going to help highlight for you. Inflation not only affects things that we do on a regular basis, such as gas and groceries, but it affects many other aspects of our daily lives, including rent, mortgage, insurance, taxes, as well as utilities. If inflation is affecting all parts of the economy, those costs are incurred by employers or governments, and they pass that cost on to the consumer, which is us. And so when you look at all of these areas that are affected by increased cost of living, it has a monumental effect on your monthly income, which lowers your purchasing power and it provides you with less disposable income, specifically in the middle to lower income tax brackets. Hopefully now you have a much better understanding of inflation, how it affects you and your family, as well as the strategies and tools that you can use to be able to combat inflation, as well as an increased awareness around inflation. When you hear reports of inflation being released or being publicized, pay attention, because that has a direct effect on how you need to operate your family cash flow and budget based upon some of the things that are going to happen from an inflationary standpoint. Thank you for tuning in.